The idea that you try to time purchases based on what you think business is going to do in the next year or two, I think that's the greatest mistake that investors make, because it's always uncertain. People say, well, it's a time of uncertainty. It was uncertain on September 10th, 2001. People just didn't know it was uncertain. It's uncertain every single day. So take uncertainty as part of being involved in investment at all. But uncertainty can be your friend. I mean, when people are scared, they pay less for things. And we try to price. We don't try to time at all. If I buy a farm near here and it turns out to be a terrible year and pests come in and there's no rain and all that sort of thing, am I going to sell it for half the price that it was selling for a year earlier, when I know over the next 100 years there's going to be 90 years that are pretty good, and a few bad ones? It doesn't make any sense to try and time things that way. And nobody knows what's going to happen tomorrow, ever. The only thing is they get very apprehensive about it at certain times, particularly when other people are apprehensive. When people get scared, they get scared as a group. The confidence comes back sort of one at a time. But there has been a lot of things that have been cleaned up in the economy in the last 18 months. A lot of the toxic assets are in better shape. There are going to be 4.5 million homes or thereabouts sold this year. There are 80 million homes roughly in the country. 25 million of them don't even have a mortgage. Of the 4.5 million homes that are sold, the people that are buying those are putting down reasonable down payments in many cases. They're buying them much more cheaply. They're covering it better with their income. The liar's loans have disappeared to a great extent. So every day, those homes are going into better hands. 4.5 million homes will be in better hands, stronger hands, people that can handle the payments better at the end of the year than it was at the start of the year. So the system is cleansing itself, but it doesn't do it in a day or a week or a month or even a year.
Biggest mistakes people make when investing?
Well, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow. And the cost of moving around. Now you get something handed to you, liquidity, which is instant. You can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around. And moving around is not smarter than investing. The idea that the European news or slowdown in this or that or anything like that, that would not cause you, if you owned a good farm and had it run by a good tenant, you wouldn't sell it because somebody said, here's a news item, this is happening in Greece or something of the sort. If you owned an apartment house and you got to raise your rents a little, it was well located, and you had a good manager, you wouldn't dream of selling it. If you had a good business personally, the local McDonald's franchise, you wouldn't be thinking about buying or selling it every day. Now, when you own stocks, you own pieces of businesses, and they're wonderful businesses. You can pick the best businesses in the world. And to buy or sell on current news is just crazy. You're in a wonderful business. You got people running it for you. You know you're going to do well over 5 or 10 years. And to think news events should cause you to try and dance in and out of something that's a wonderful game is a terrible mistake. So get into a bunch of wonderful businesses and stay with them. I bought my first stock, when I was 11 years old, and it was about 3 months after Pearl Harbor, and Corregidor was falling, and they had the death march at Bataan, and all the news was terrible. It was a great time to buy stocks. And I should have held that stock forever, and I've been buying stocks ever since.
I know you're famed for your success, but I was curious if there were any particular moments in your life or mistakes or failures that you've made that were particularly memorable, what you may have learned from them, and if you had any particular advice for the students here in dealing with discouraging circumstances.
Yeah, I've made a lot of mistakes. Biggest mistake, not the biggest, necessarily the biggest, but buying Berkshire Hathaway itself was a mistake, because Berkshire was a lousy textile business. And I bought it very cheap. I'd been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And I was taught that, we'll say in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts, and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. It's disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. It's so much easier just to to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks, and Berkshire was selling below its working capital per share. You got the plants for nothing, you got the machinery for nothing, you got the inventory and receivables at a discount. It was cheap. So I bought it. And 20 years later, I was still running a lousy business, and that money did not compound. You really want to be in a wonderful business because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake. So you might say I learned something out of that mistake, and I would have been way better off taking what I did with Berkshire is I kept buying better businesses. I started an insurance business, See's Candy, the Buffalo, all kinds of things. I would have been way better doing that with a brand new little entity that I'd set up rather than using Berkshire as the platform. Now I've had a lot of fun out of it. I mean, everything in life seems to turn out for the better, so I don't have any complaints about that, but it was a dumb thing to do. I went into US Air. I bought a preferred stock in 1989. As soon as my check cleared, the company went into the red and never got out. I mean, it was really dumb. I mean, I've got an 800 number I call now whenever I think about buying an airline stock. I call them up any hour that, fortunately, I can call them at 3 in the morning, and I just dial and I say, my name's Warren, I'm an aeroholic, and I'm thinking about buying this thing, and then they talk me down. I mean, it takes hours sometimes, but it's worth it, believe me. If you ever think about buying an airline stock, call me and I'll give you the 800 number because you don't want to do it. But we got lucky in terms of how we eventually came out on it. But it was a dumb decision, all mine. And I've done biggest in terms of opportunity costs, eventual costs. I bought half interest in a Sinclair filling station when I was about 20 with a guy who was in the National Guard with. And I had about $10,000 then, and I put $2,000 in, and I lost it all. So that was 20%, and that means that the opportunity cost is now $6 billion of that filling station, which is a big price to pay for, getting to wipe a few windows and a few windshields and things like that. So actually, I like it when Berkshire goes down because it reduced the cost of that mistake on an opportunity cost. Biggest mistakes I've made by far are mistakes of omission and not commission. I mean, it's the things I knew enough to do. They were within my circle of competence, and I was sucking my thumb. And that is really, those are the ones that hurt. They don't show up anyplace. I probably cost Berkshire at least $5 billion, for example, by sucking my thumb 20 years ago or close to it when Fannie Mae was having some troubles, and we could have bought the whole company for practically nothing. And I don't worry about that if it's Microsoft because I don't know it. Microsoft isn't in my circle of competence. And so I don't have any reason to think I'm entitled to make money out of Microsoft or out of cocoa beans or whatever. But I did know enough to understand Fannie Mae, and I blew it. And that never shows up under conventional accounting. But I know the cost of it. I know. I passed it up. And those are the big mistakes. And I've had plenty of them. Unless I tell you about them in the annual report, and I resist the temptation sometimes, unless I tell you about them in the annual report, you're not going to know it because it doesn't show up under conventional accounting. But omission is way bigger than commission. There's big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come. Because you're not going to get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it. And every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company, you didn't even understand what they did or couldn't pronounce the name, but they made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one the rest of your life, you would think a long time before every investment decision. and you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.